Okay, we're going to get started. Good afternoon, everybody. I am Kathy Neifeld, one of the four principals at AgencyONE, along with my partners Ed Lesher, Dennis Bartos, Gonzalo Garcia. We are pleased to welcome everyone to the fifth installment of AgencyONE's 2021 biweekly webinar series. Since the beginning of the year, we have had webinars on estate, income and gift tax planning and asset protection under the new Democratic administration, featuring attorney Alan Brown and advanced markets consultant Randy Zipsey. A webinar on the changes to Internal Revenue Code section 7702 and the impact that these changes will likely have on permanent life insurance products with Bobby Samuelson. A webinar on digital marketing tools, resources, and strategies that you should be using to help drive more business with Samantha Russell, and a webinar on premium financing with US Bank and Taylor Miller. All of the webinars, with the exception of the one on section 7702 featuring Bobby Samuelson, have been recorded and are on the AgencyONE YouTube channel and also on the AgencyONE website for your convenience. For those of you that are new to AgencyONE, a brief introduction. We are a very high-touch, exclusive brokerage general agency. Exclusive, what does that mean? We have a platform called the AgencyONE 100, and one of our guiding principles is to work with a small, select group of advisors in a very large way. The advisors that are part of this group are like-minded, highly successful, creative, and driven. We focus on life insurance and fixed annuities. If you have other needs, like disability or life settlements or standalone long-term care, we have strategic relationships with the best providers in the industry to refer you to. We also have the premier underwriting department in the industry, led by my partner Dennis, who you are going to hear from in a minute, and advanced markets and case design departments led by my partner Gonzalo. If you want high-touch, personalized attention, advocacy, and want to feel like you and your cases are important, then AgencyONE is or should be your brokerage general agency. If you would like to learn more about us, the AgencyONE 100 platform, and how you can become a part of it, or you have a case you would like to discuss, please reach out to myself, Gonzalo, or Dennis, or Ed. I have some additional important announcements about what AgencyONE has planned for the next few weeks, and I will be sharing them with you at the end of the webinar. Now on to today's webinar. The evolution continues, COVID and underwriting. COVID has played havoc with underwriting requirements, which seem to be changing daily. Our featured speakers, who are staying on top of all of the changing requirements and are going to address this and more, are my partner and head of underwriting operations at AgencyONE, Dennis, our Vice President of Underwriting, Jessica Karakoff, and also Julie Melendez, another underwriter that rounds out the team. Our underwriting team will try to respond to any questions that have been asked at the end of the presentation. So please submit your questions through the chat function or feature at the bottom of the screen, and we will be monitoring them as they are submitted. This session is being recorded. I now turn this over to Jessica Karakoff. Jess, take it away.
Thank you, Kathy, and good afternoon, everyone. Thank you so much for taking some time with us today. It is truly hard to believe that it's been a year since the pandemic took hold of everything around us, but vaccines are slowly making their way into our communities, and hopefully we will emerge from quarantine and begin to find some sort of normalcy soon, whatever that looks like going forward. So today we thought we'd spend a little time talking about where we are with the COVID vaccine, domestically and globally, where some of the underwriting concerns remain, and when we may see some of the carriers start to walk back some of the restrictions they have in place. Every day, we seem to be getting notices of new programs or product changes. So we're going to take time to highlight a handful that we think you really need to know about. And then finally, we're going to cover some of the new tools that we've created to help you and your clients navigate underwriting successfully. So with that, I'm going to toss the ball over to Dennis Bartos, who is going to start us off by talking about the vaccine.
All right. This slide is available on the internet, guys, but we find that it's very interesting to us on what's going on in the United States right now. Jess, if you can highlight Texas for a moment, since Texas has decided today, along with Mississippi, to open their businesses 100% and no longer are going to use face masks. So we don't know if that's going to affect mortality, but right now it's not going to affect the underwriting. But can you highlight Texas and tell me how many people in Texas have been vaccinated so far, Jess?
I think that percentage is at about 11. That's what we saw this morning.
All right, and we've only had about 22 million people vaccinated in the United States that we know of right now, although the statistics will say that 78 million doses have been given out. So there's some kind of a crossover there, but you know, the vaccinated, a lot of this is double, people need 2 shots. Okay, so they're not completely vaccinated yet. And in fact, I get my vaccine tomorrow. My first Pfizer shot is tomorrow at 11 a.m. So, and I'm already scheduled for my second one. That's how they box these things together. Okay, so here in the United States, we have a very narrow-minded view of ourselves and the world, but the world is facing COVID. And I want to show you a world slide here that's very interesting. And this you probably haven't heard this, but look at Israel right there at the top of the curve and why there's so much talk about what's going on in Israel here. Very early on in the COVID pandemic, Israel, the government of Israel and Pfizer Pharmaceuticals made a deal basically, and Pfizer said, we will guarantee you vaccines when we have them so we can get your entire population. And right now about 95% of the Israel population has been vaccinated. This is a perfect environment. It's a controlled environment. They are on socialized medicine. So when you hear on the news about variants of this vaccine or variants of the virus requiring a different vaccine perhaps, Pfizer is positioned here with this Israeli group to put new vaccines and new messenger RNA into the field in, we've been told, 6 weeks. So it's going to be a very rapid response here. You notice how the United States is way down there on a percentage of the population growth, but with 25 million people already vaccinated in the United States, we're still 2.5 times Israel. So right now we're kicking up the dirt, and we're doing pretty damn good right now. All right, next one, please.
But we still have a ways to go in terms of herd immunity, which is, depending on which scientist you talk to, between 70 and 90% of a population having been vaccinated. And that is sort of the signal of the end of the pandemic. So the thoughts of these slides were just to give you sort of some idea of where we stand across the globe, and then as well as where we stand throughout the country. So that process continues. And as you can imagine, the insurance companies are also watching these trends very closely. COVID infection, hospitalizations, and deaths. We spoke to a whole lot of our carriers, partners, as well as reinsurers on their approach to this. And interestingly, a handful of carriers are looking very specifically at a handful of states. The states, you know, it might be 7 or 8 states where the bulk of their business is saturated. Many are looking at the United States trend, and then of course the reinsurers are keeping an eye on that global trend. So what can we expect? What we anticipate to happen over the next 2 to 3 months are going to be pretty slow pullbacks on some of the restrictions. I think what we're going to see are maybe, you know, a company that isn't looking at the 75-year-old yet may start. There might be a company that is restricting certain impairments. They may lighten up a little bit on that. But any large-scale rollback does not seem like it's going to take place for quite some time. Why? Well, although we have 3 very effective vaccines in the United States right now, distribution is just going to take time. And then even with that, there's still a number of questions surrounding how long immunity is going to last and whether or not those that have been inoculated can still carry or spread disease. Naturally, our ask on your behalf is, well, if I have a client that's had both vaccines and that scenario still falls under COVID, under a company's COVID underwriting restrictions, can you look at that individual, you know, on a case-by-case basis? And as you can imagine, the answers were all over the place, from a resounding no, the vaccine doesn't matter, don't try it, to others that will look at the cases on an individual basis.
We've had some success there, you know, where just as we've had some negative underwriting because people, because of underwriting concern about COVID, those restrictions, you know, when you get a table 4 and they say, we're not going to offer table 4 under a COVID restriction. Well, if they've got a vaccine, if they've been vaccinated now, is there really a concern about the COVID environment? That's the questions that are being asked right now.
Right, and the answers you're getting from at least the medical directors are, their reluctance stems from the new variants. Viruses are always replicating, but not all variants are going to evade the immune system. And fortunately for us, the vaccines that are on the market right now are showing some level of protection against the variants that have been identified so far. But nonetheless, our ask to you, the producers out there, is ask your clients if they've had their vaccines, especially if they're in the older ages or if they have diabetes or any kind of medical impairment that puts them at a greater risk. We will use that information wisely and obviously to your and your client's benefit.
Yeah, we don't want to put another question on our informal inquiry like that, but please just write at the top of it or send us an email when you outline your cover letter on the case and say, yes, this client has had both vaccines.
So the concern heard across the board that is kind of the mainstay for a lot of the companies surround the long-term effects of those that have recovered from COVID. There were several reports in the news this week that NIH announced the first of its 4-year phase, $1 billion initiative to learn more about why some COVID survivors have so many long-term symptoms even after the virus has presumably left the body. You've probably heard of this group referred to as the long haulers. These people have very long-lasting symptoms ranging from fatigue to brain fog, headaches. Some are having arrhythmias, anxiety, depression, retained lost smell and taste, issues with sleep, memory, concentration. And while that doesn't scream a mortality concern, why it's happening is the mortality wonder. Is this some sort of damage that's been done? Is it going to go away? Is this permanent? That's kind of some of the unknown right now. So carriers are definitely going to be inclined to look for any permanent damage that may have happened as a result of the virus. Because if you remember, the COVID-19 virus causes this like massive inflammatory reaction in the body. And there's a critical point in the disease where the disease can progress if the immune system goes from a protective reaction to a much more exaggerated response. And when the immune system overreacts, then all of the inflammatory components become much more dangerous. And because it's a systemic response, all organs are fair game. So you're seeing all kinds of damage with all kinds of different patient populations, and obviously that's going to be the concern going forward in underwriting. And this is also where we're starting to see reinsurance manuals, particularly Swiss Re, which is a very large reinsurance company, and many of our direct companies use Swiss Re for their guidelines or use it as a base, and then obviously create some of their own proprietary guidelines. They're posting new research and then new underwriting guidelines for their direct companies. So we're going to go.
Yeah, we're focused today on primarily how the vaccine is affecting underwriting. But a question just popped onto the screen here, Jess. Someone has asked, what if they've already had COVID-19? What if they've already been infected? We did a webinar, right there around Christmas time, I believe, on underwriting after the COVID infection. So on a very quick note, as Jess said, there are many different phases of this disease, and every person is different in how they react. Some people have the virus and they have no symptoms at all. And some people get the virus and they're like these long haulers. They've got these lingering effects. How this is going to affect long-term mortality, nobody knows yet. Nobody knows. But we are underwriting people who have survived this disease. Those that have had the disease, recovered at home, we can insure them after symptoms have disappeared in 30 days. So it's a pretty open market right now. If they've had to go to the hospital, there's a little more concern, of course, maybe 60 days or 90-day postpone. But if you've been in the intensive care unit and you required ventilators, you're in a different gig. Okay, that's a very serious recovery situation. So you're at least a 6-month postpone after something like that. Okay, that's just touching on it.
Yeah, probably longer. Probably longer. Yeah, we've had a ton of clients that have caught COVID, recovered from COVID, and been insured. It really, if your client says, I had COVID, your next question is, when did the symptoms subside? Did you recover at home, and when did the symptoms subside? Your 30 days is basically what you need to think in your mind, unless they give you a different clue that tells you this was more than just recovering at home. If they were hospitalized or needed treatment, call us and we'll work through that particular situation. So going back to the underwriting and kind of what you can expect going forward. So if you think of COVID as kind of the lungs as the main target of COVID, and let's say we get a client in that maybe had a pneumonia or some sort of hypoxia as it related to COVID, you're going to expect underwriters to want to see a follow-up chest CT, maybe a pulmonary function study, something directly related to the damage done to the lung. Same with cardiac. Cardiac imaging shows that COVID can damage the heart muscle, which obviously can affect the heart's ability to function. So in that scenario, you can expect they're going to want to see a current echocardiogram, probably an NT-proBNP, maybe a stress test, just kind of whatever matches that clinical picture. We've even seen some young folks having strokes or seizures. That gets really tricky for anybody that's had a client that's had a stroke before. There's quite a postpone period with that, and then those ratings kind of start out pretty high. But generally speaking, whatever damage was caused as a result of the virus is going to be underwritten based on the secondary diagnosis. So last example, adult respiratory distress syndrome. That's basically that massive attack on the lungs. These are people that end up in the ICU ventilated and a lot of times don't make it. Let's say you had that and you did recover. Your diagnosis that we're probably underwriting is chronic obstructive pulmonary disease or maybe pulmonary edema. So it's not going to be COVID. It's going to be what resulted from COVID going forward.
Makes sense.
Yeah.
Okay. I'm going to take this one, Jess. This is a double-edged sword, and I know you all have experienced this. A year ago, the entire world changed, and underwriting was no different. The paramedics, specifically, the paramed organizations, everyone was sequestered, everyone was quarantining. The paramedics were not going out into the marketplace to do insurance exams.
We're going to their doctor.
I'm sorry.
I said clients weren't going to. Clients weren't going to their doctors.
Clients weren't going to the doctors for their routine screening tests, and so the insurance industry responded with waiving out the exam requirements. The paramedics didn't want to show up at the houses. So it was a double-edged situation here. The clients didn't want the paramedics to show up in the first place. We've had paramedic services, the whole EMSI organization closed their doors. So there were less paramedics in the country that wanted to do paramedic exams. The insurance industry still wanted to do business, of course, so they started to waive out all the things that you see on the screen here. You know, people didn't want to go to the doctor to have their colonoscopy or their mammogram or their pap smear or any of these routine tests. And the insurance industry was amenable to that and have been for the last year. But we're going to see a rebound. This is a prediction on our part. We're going to see a rebound here in 2021. You're not going to have these tests being waived out any longer. So we're going to see the underwriters say, you know, you were supposed to have a colonoscopy last year. We're not going to underwrite you until you have that colonoscopy as your screening test or your pap smear or your mammogram. Okay, last year we did it. We're not going to do it now. Jess?
Yeah, we've, you know, the whole point to these tests is so that if you are brewing a malignancy, it's caught at a very early stage. And with a lot of the U.S. population putting these off, the concern on the part of the carriers are that cancer is going to be caught at a later stage. So they're going to be watching early duration cancer claims and things of that nature. But we've already had a couple cases where a client was overdue for a colonoscopy. It was not for cause. There was no history of polyps. But that medical director took a hard stance and said, we'll issue your coverage at whatever that face amount was, but if you want 1 penny more, we want a screening colonoscopy and maybe, you know, 1 or 2 other things that otherwise would, you know, just wouldn't have been an issue. So just something to keep in mind. And then public service announcement, whoever's listening, go get your screening test done. Protect yourselves. There's plenty of safety measures in place to move forward with that.
Absolutely.
Foreign travel, good. On a positive note, is open at most carriers. Most of them are using the U.S. Department of Travel Advisory. That website is right down here at the bottom for you. Majority of carriers are going up to level 3. Some are sticking with 1 and 2, but that is an option. One additional thing is the quarantine situation. So for foreign nationals coming into the country, a lot of carriers for a while would require them to quarantine for 30 days before they could take their app, do their exam, and so forth. Those are being lifted as well. So that's good news. So back to the perfect storm, Dennis.
Yep. No exams. Okay. This is the paramedics not showing up for the exams. So many of our producers have complained about the paramedic services not being able to examine their clients for 3 or 4 weeks. So the exams became a problem last year during COVID. We had less examiners out there. We had less exam services, and the companies needed to put the business on the books. So they developed the accelerated underwriting programs, which had been in place for several years before COVID. But we've watched many of these programs accelerate themselves during the last 12 months. So let's go ahead and talk about some of these programs.
Yeah, Julie's going to go over the options, guys, but what's important to understand here is that these carriers are coming out of pilots and putting into practice the use of digital health data, whether it's patient portal data or electronic health records, and they're taking these cases that are just outside of that accelerated underwriting bucket, and they're trying to get them approved without insurance exams. And it's pretty impressive, the ages and the face amounts that we're starting to reach here. So pay attention, because these may fit a lot of your clients, and you can save the headache of the insurance exam if they qualify. Take it away, Jules.
Yep. So Principal has really kind of led the charge with accelerated underwriting, and we've seen great success with their accelerated underwriting program. And they've recently made some changes to make that program even better. The process, it's essentially stayed the same. It's still for your standard non-tobacco or broader risk classes, but if your client doesn't qualify right off the bat, through those initial internal checks, they will automatically order digital health data, such as records from human API, so that's the patient portal data, to see if they have what they need to get that case approved, still without requiring a paramedical exam. Something that we think is really important to highlight here is the face amount increase. The guidelines were previously at a maximum of 1 million, but now we're seeing in the age group of 18 to 40, the maximum is at 3 million, and ages 41 to 60, 2.5 million. And with their executive BUL 3 product, you could potentially secure up to 5 million, and those are ages 20 to 60. So Protective is another carrier that has an accelerated program, their Plus program. They have made an enhancement. The parameters of that program have remained the same, but if you have a client that has applied for the program, they've otherwise qualified, but say they have a medical condition that kicks them out, such as asthma. We're talking medical conditions that don't need to be monitored through labs. So for instance, asthma, the severity of asthma isn't determined through lab work. So they will actually order an APS and see if there's enough information there to get that case approved without labs.
Yeah, and just conversely, just to give you some context, if it was diabetes that kicked them out of this accelerated process, that wouldn't work under this enhancement because diabetes is measured by labs, by numbers. So these are just like that. Sleep apnea is a really good one because everybody seems to have sleep apnea. So this is definitely something that I think is a good enhancement.
Yeah, and as Julie goes along here, she's going to be touching on the changes in these accelerated programs, and they're all on our website, of course. But 2 years ago, when accelerated underwriting became a buzzword in the industry, you had to be standard or preferred. Okay, and now we're in a mode where we can actually offer substandard rating classes in an accelerated underwriting mode. So it's important that you know that these changes are there. It's important that you can have your clients underwritten now without an exam and have these impairments and still have the accelerated program.
However, beware. Go ahead, Jules.
Something that has come about with these processes and their enhancements is the need for carriers to put additional focus on how that medical information that they're receiving, how it's shared with us, how it's shared with you, the advisor. So we're specifically highlighting Principal's disclosure form here. It was just recently added to their drop ticket process within the last couple of months, and we anticipate it's going to be added to their full e-application process as well. So in order for Principal to share any medical information whatsoever with us or the advisor, this form needs to be signed and completed, authorizing them to be able to do that. So if you'll see in the highlighted portion down there, the client has to put an X that they do hereby authorize the disclosure of their medical information with us and the advisor. So there are no exceptions on this form. If they don't sign that, if they don't authorize it, they can't even tell us why a case was approved a certain way. So if a case was standard, they may just say due to medical history, and we don't necessarily get to know why.
Yeah, and the AgencyONE HIPAA does not trump this. And there's just different regulations that are going to keep coming out as it surrounds the electronic health data. So these disclosures it's really important that you're aware of them and that you make your clients aware of them so that they're comfortable understanding that this information is shared with your underwriting team in an effort to negotiate on their behalf. So they all look a little different, unfortunately, and a lot of them are already in these drop tickets and paper applications. but certainly something to keep an eye on and make sure your clients are aware of.
All right, on March 1st, Cincinnati Life introduced their first accelerated underwriting program. This is for your standard non-tobacco or better classes, but a couple of things that are a bit of a niche here. Cincinnati Life has an ROP term product, and also they are a carrier kind of similar to Prudential, John Hancock, that they classify the non-cigarette smoking, non-vaping tobacco users as non-tobacco. So your chew, dip, snuff, cigar users, they are considered at non-tobacco classes. There just needs to be complete disclosure of use.
So you have another player in that arena. You know, we've had a standardized 3-company mix before. Now there's a 4th. Cincinnati Life has some very, very competitively priced products.
Mm-hmm. Yeah. And good underwriting.
Yeah. Mm-hmm. Banner has actually introduced a new digital process called LabLift. They have an option to accelerate those healthier individuals again. But what we found to be, another niche here was that they will consider all underwriting classes. If your client has had comprehensive labs drawn with their physician within the last 18 months, then they will order and review the APS and see if they can approve without a paramedical exam. That's all underwriting classes. So, and it's ages 20 to 60. So you could have a coronary artery disease case and the individual is, 60 years old. They could still potentially get through and approved without having an exam.
And digital end-to-end, yeah.
It is digital end-to-end. Yeah, and speaking of digital, we've seen obviously a trend in carriers being more focused on creating a more digital experience. And with that, the digital interviews have come about. So carriers have been continuing the trend move towards digital process, and they've, instead of having a telephone interview, they give the option of a digital interview. So if you have a client who doesn't really want to sit and do that telephone interview with a stranger on the other end of the line, or they don't want to have to wait to complete it at a set appointment time, then they can choose the option of the digital interview. And we have a few carriers that offer it already. Nationwide is coming out with it soon, and we do anticipate this being, industry-wide soon here.
Can we focus on the last thing entered on that slide, guys? You say the lower likelihood of errors on here. Mm-hmm. The reason that's there is because agents have been notoriously poor at asking about medical histories because they don't like it. They don't like getting into the client's head about, their personal medical history. So they run over these things where the clients, when they're doing these digital interviews and filling out their own non-meds, basically, they're much more accurate and much more detailed. And that's what the carriers are finding. Okay, it's all good for the agents because you don't have to ask the questions anymore, and all good for the carriers because they're getting more comprehensive information.
Yeah, and it follows the same process, everyone. So if you drop a ticket, and the next natural step would be for the client to receive an email with a phone number to set up a telephone interview, instead they're going to receive a link. They click the link, they open up the part 2, and then they can take as much time as they want, go back and forth to fill in all of that information. And the feedback from the clients so far has been very favorable. And I'm telling you, if carriers don't have it, they're working on it, and we're going to see more of them soon. Okay, I'm going to take this one. So this program is pretty exclusive. I think there's only 8 or 9 brokerages across the industry currently that have access to this. And I'm not talking Libra, I'm talking AgencyONE. And this is kind of John Hancock's first step towards dynamic underwriting. I think you've heard us say that a few times, or individualized underwriting. So what it's doing is it's giving credence to the folks that are in that higher net worth that get, you know, VIP physicals. They're taking these clients, obviously 35 to 70, you have to have at least a minimum household net worth of 10 million, $5 to $65 million of coverage, reading the APS, assuming they've had some labs done within the last 12 to 18 months, they're going to look at that file and just decide then if they can approve the case. If they can't approve the case, maybe they just need an EKG, or maybe they just need, I don't know, one or two other little things. They're taking them out of that bucket of standard age and amount requirements and treating them like the VIPs they are, because most of these people receive excellent medical care, have more tests than most of us underwriters even want on the books. So a really nice opportunity here, and that's up to $65 million, potentially with no exam. Okay, a quick update on Symetra, their foreign national program. They just recently reduced their nexus requirement to $25,000 in a 30-day-old bank or brokerage account. That was previously $100,000 in 90 days. They're now allowing premium financing. And for my foreign national agents that are listening, we now have another term option. That's good news. It's $1 million minimum, but it's there. And what's really special about how Symetra's foreign national program is set up is that the clients fly in, they do their app, they do their exam, and they have to return to their country of origin. All of the policy information can be delivered electronically. That is a niche for Symetra.
Why is this important, guys? Let me point out something here. We've got a lot of agents who deal with corporations and employee benefit packages for their executives. Here's one where you've got key personnel that are offshore. They reside overseas. They come into the United States once a year, and the company wants to get key man insurance on them. To date, we've only had the option of putting permanent life insurance in place on these foreign nationals that reside overseas. This is a niche for Symetra. Yes, you can get the term insurance that you want here now as a foreign national for key men. Okay, that's pointing right at you, David Appel. I know you're on the screen. Okay, all right.
Okay, just you know, this isn't really underwriting, but we thought it was worthy of a reminder. The 4506T tax transcript form is now the 4506C. We only know of a couple carriers that are using that, but beware that that has changed. John Hancock came out this week notifying that they are discontinuing a handful of products in New York. App deadline April 15th, issue deadline June 15th. They are going to keep accumulation IUL protection and vitality term. As many of you know, many of our companies are extraordinarily behind right now, and it's taking eons to get policies issued, and some of it's just become straight painful. As a result, we're starting to see some of these carriers back off on what they will review informally. So a couple changes with two of our bigger companies. Principal now won't look at it unless it's at least a $5 million case or a $10,000 premium. Prudential's $3 million face or $25,000 premium. Equitable has decided that they will look at term cases now, which they were only looking at permanent prior, obviously, but their minimum face amount is also at $5 million. So just a reminder of that.
All right. Any of you who've received emails from any of the underwriting unit here at AgencyONE lately, you see these icons at the bottom here? We're doing everything we can, guys, to make your job easier. As we go digital here in underwriting, it is important to prepare your clients for the exam if they're going to have an exam, for a telephone interview if they're going to have a telephone interview, or if they're going to do a digital application. We now have these tools. All you really have to do is simply click on them. Jess, highlight this, please.
Yeah, so let me back up one step. this right here, click on any of the following icons for important underwriting resources. You can literally cut and paste this to your own taglines. The individuals inside your offices that assist you can do the same. And when you hover over each of these icons, they link you to very important prep tools. For instance, the little stethoscope will take you right to the YouTube channel with it preparing for the insurance exam. The informal inquiry and HIPAA authorization, which we will always keep up to date. The senior supplement interview to help people prepare for the senior supplement. And then our newest video is preparing for its interview prep. This is telephone interview or digital prep. And also on the website, we have a corresponding little worksheet. I know this looks cumbersome from afar, but how many of you gotten calls from ticked off clients that it took an hour and a half, 2 hours, or what have you, on the phone with a stranger going over all of this information? Well, some of the best scenarios are the clients that have been prepared. They knew to get Benny information. They knew to get, in-force policy numbers. They knew to grab all their medications and write them down and get their doctor's names and telephone numbers. When you walk into those scenarios prepared, whether it's on the phone or sitting at the computer, it's going to go more smoothly and you're going to have a happier client. So please, please, please use them. And if you need any help customizing, just let us know. We're happy to help. The icon with the clipboard will link right to this one-page flyer on connecting portal data. This flyer is hyperlinked with everything your client will need. There are very simple instructions on how to get to the portal and how to connect it. The security information is linked. All of the frequently asked questions, the help desk, everything is here for your clients to connect data when our underwriting unit has recommended that you do so. And just a note on human API and portal data, there have been some regulatory changes, I believe as of April, we're mandating that doctors allow their patients access to more information. So while some of this information is still coming across without everything we need, we are already starting to see things come across that we didn't before, like physician's notes and different testing. So we'll keep you informed as this develops, and of course let you know when we think you should take this avenue to get APS information.
MIB. Yeah, we're going to close this out now, kind of, and go to questions, I guess. But this is an important item, and it's easy digital information for you. Every one of you, as an agent out there, should go to this website, www.mib.com. In the middle there, you see circled, request your MIB Underwriting Services consumer file. This is free. You should get your own consumer file sent to you. We've had a number of cases that have been fixed as we've asked clients to retrieve their own MIB code files, and then we've addressed the errors that may be on the MIB. But the underwriters have this information at their fingertips. You might as well have your client have the information in front of them too.
You want to do a quick case study just to tell them the most recent one?
Go for it.
Okay, so we get a call from the carrier underwriter that the MIB had been run and that the client had been positive for cocaine, I think in 2019. So Dennis got the job of calling the producer, explaining the hiccup. Producer talks to client, and client absolutely loses his mind. Very long story short, that client had a minor surgery that day and had fentanyl, which was admitted to on the part 2, the exam, because I don't know why he had an exam the same day as a little local surgery, but he did. And as we traced it back, we learned that the initiating underwriter, the underwriter that coded it at the time, coded it incorrectly. And so we were able to get that fixed, and the client was happy. But mistakes happen, that's human error. And then as things become digital, there's going to be errors there. So this is just another tool in your toolbox that's easy and free for you to grab on yourself or your clients if there's any question. Last but not least, everything that we talked about today and a whole lot more can be found at AgencyONE.net. I, of course, highlighted the underwriting tab with all of the different links to the videos, the worksheets, the accelerated underwriting spreadsheet with all of the programs, current with hyperlinks to field guides. Just a plethora of information can be found there. And of course, if you have any unique situations or questions, we are always available to help. So I can't see questions if there's any, so.
Jess, hey, this is Kathy. There was another question that came in from David Appel, which was as it related to that special HIPAA form. And the question, and it happens, and it's a good one, is, you know, is there the opportunity to build a carrier HIPAA form that would satisfy multiple carriers as opposed to a specific carrier HIPAA form, so that if we're going, you know, to multiple carriers, we don't have, you know, it's all about the client not having to sign more and more and more paperwork.
I get it. I'll take that one. Okay. This is more of a compliance issue, I'm sure. Just as we've got institutional health records like Vanderbilt or Cleveland Clinic that require their special HIPAA authorization forms, this page that these carriers are going to be putting out is special to them. It is their lawyers have put the language together, and they have filed that particular language with the states involved because we are state regulated. So it's a regulatory issue with them. This form is going to be part of the application. If they don't answer the question, then it means they've answered the question, no, do not disclose. So right now, it's part of their application, and the clients are going to have to sign it if they want the information disclosed to us, if they want us to help in the negotiation.
Thanks, Dennis. If anybody, we still have, thank you everyone for hanging in till the very end. If you have any questions, please type them into the chat function and we will address them. If you would prefer to ask the question live, just type into the chat function. Please unmute me and we will, we are technologically advanced enough to unmute you. I would like you to comment additionally, underwriting team, on the on how advantageous it is for the advisors to go through the happy process themselves before asking their client to do it, and how much that helps the process in trying to retrieve some of the records. Who wants to take that?
Go ahead, go ahead, Dennis.
Yeah, I love the happy process. Okay, I mean, we've kind of nicknamed it happy, and it's human API, but we call it happy because it makes us happy. We can get medical record, we can get medical record information very rapidly, extremely rapidly. If you go onto your own medical record portal right now, on your own life, okay, and put through the happy system, that's what Kathy's asking you to do, is to go test this on your own self. You'll see how easy it is for the clients when they've walked through the instruction sheet that we've prepared for them. We had, and this is my primary example, and it began last February when COVID began. You know, we needed medical records out of Langone Medical Center and Mount Sinai in New York, okay? That's COVID Central in New York City. Okay, there were no medical record people on staff that would dig out medical records, so we used Happy. I received 1,500 pages of medical records in less than an hour. Yeah. It was unfreaking believable for us. Now, from your standpoint as an agent, and I say this all the time when I'm discussing this with you guys, when you fill out the informal inquiry, it asks you who is your attending physician. It also asks for consulting physicians. But nowadays, people have 6 or 7 different doctors that they've seen, even if they're healthy. They've got urologist and they've got a dermatologist and they've got a gastroenterologist for their colonoscopy. And when we order records from the attending physicians, we don't always get those names from the attending physicians. So we're missing part of the medical records. When you go through the Happy Portal, the Happy Portal information is a database on all the doctors and all the records that are inside that health network if the client is in the health network, in the same network. So we get 6 or 7 doctors of information coming down through the Happy Portal, and it saves you. You're the agent, and you're responsible for the information that's on that application. So if we get all the doctors listed, it makes the case less contestable for you as the agent. It's a much better security blanket for you. So
and then I'm just going to throw in one more comment on that. You know, electronic health records and portal data is evolving. There are some little shortcomings where we might not get all the information we need, but still to that, it's still a good field underwriting tool for us. Even if it doesn't get us every single thing we need, it can give us enough to know what we're looking at, way more than probably just you asking the questions on an informal inquiry are going to. And then that might let us advise you to go formal out of the gate rather than informal. So there's a lot of really good ways to use portal data. It's important to understand that it's not perfect, but and to Kathy's point and Dennis's point, knowledge is power. Go through the process, try it. You know, you'll be able to explain it better if if your client wants to go through that process. And we do have, service teams at Human API that also can help clients. And we've had them get on the phone with clients. So there's an option for a help desk, so to speak.
Thank you. I think that absolutely answered the question. I am not seeing any other questions that have come in. Underwriting team, is there anything else that you would like to share? Thank you. Otherwise, I am going to wrap this up.
Use the tools, folks. Use the tools.
Absolutely use the tools.
Okay. All right. Well, Dennis, Jess, and Julie, thank you. That was absolutely terrific. Now, what's next? On Thursday, March 18th at 4 o'clock Eastern Time, we are going to be hosting an economic update with Anirban Basu. Dr. Basu is going to present current economic data and analysis juxtaposing the pre-pandemic and pandemic world, and then offer a forecast for the post-pandemic environment. Dennis, are we going to get to a post-pandemic environment? Do you think it's coming? Please shake your head yes.
3 years.
Oh, good Lord. Okay. For those of you that missed the economic update that Dr. Basu provided during our 2020 annual meeting this past October, he has a real love for J.R. Tolkien and the Lord of the Rings. And now that we are 1 year into this COVID pandemic, I'm sure that we are going to see additional comparisons. Please mark your calendars. Those are my closing announcements for today. If you have any questions or would like additional information, please reach out to me, Gonzalo, or Ed, or Dennis. Thank you for joining us, and we hope to see you again on Thursday, March 18th at 4 p.m. Eastern Time. Have a great afternoon. Thank you.
Have a great day, everyone.